Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a financial report that's a bit like a roller coaster ride, except instead of adrenaline, it involves bankruptcy filings and last-minute loans. Buckle up, because this could get bumpy. We're looking at ENGlobal Corporation's recent filing, which tells a story of financial distress and attempts to stay afloat. So, this is an 8K filing, which is basically a company's way of saying, hey, something important happened and we need to tell everyone right away. In this case, the important thing is that ENGlobal Corporation is seeking bankruptcy protection. The report is dated March 6, 2025, which is the date of the earliest event reported. The ENGlobal Corporation, the company we're talking about today, is based in Houston, Texas. Their IRS employer identification number is 8803222261. These are just basic details. Their phone number is 281-878-1000. This is just some basic company information. This section just shows that the report is not meant to fulfill any other obligations, so they're not trying to cover up other things here. The company's stock under the ticker symbol ENG is traded on the NASDAQ Stock Market LLC. Keep that in mind. We will talk about risk factors for the common stock later in the report. Now let's get to the meat of the report. ENGlobal has filed for bankruptcy. They're seeking Chapter 11 protection, which is like a financial reset button that allows them to reorganize their debts while continuing to operate. They're in big trouble. It's like they are trying to reorganize their financials instead of closing shop. The bankruptcy case is being handled in the Southern District of Texas, and it's called ENGlobal Corporation et al. Case number 25-983. Keep in mind that all legal documents and updates will use this. To keep the lights on during this bankruptcy process, ENGlobal has secured a loan. It's called a DIP credit agreement with Gulf Island Fabrication Inc. as the lender. DIP stands for Debtor in Possession, which means they are borrowing money while being in bankruptcy. The loan is for $5 million. It's a secured loan, and that means that ENGlobal is offering up its assets as collateral, which means they may lose some if things go south, and also has super priority, meaning it gets paid back first. What will they use this money for? Primarily to keep things running working capital, pay back the interest and expenses on this very loan itself, cover bankruptcy related expenses, and anything else the lender approves. The loan needs to be paid back fairly quickly, or more accurately, the DP credit agreement has an earliest maturity date of 6 months after the petition date. But if the bankruptcy court doesn't approve everything fast enough, that deadline gets even shorter. Plus, if ENGlobal is sold or reorganized, the loan is due immediately. The interest rate on this loan is 12.0% per year, which is pretty high. It shows how risky ENGlobal is considered by lenders. This loan gets first dibs on ENGlobal's assets. This means that if ENGlobal can't pay back the loan, Gulf Island Fabrication gets paid before almost anyone else. Here they refer back to the first item about the DEP credit agreement. This part is just confirming that they've taken on a new financial obligation. Here, ENGlobal is basically warning investors that trading its stock is super risky right now. The price of the stock might not reflect what the stock is actually worth, if anything, during the bankruptcy process. The company also provides a caution about forward-looking statements, saying that predictions about the future are subject to risks and uncertainties that could cause actual results to be different. They point to other reports that outline all the risk factors involved if you want to read up on them. Finally, the report is signed by Darren W. Spriggs, Chief Financial Officer, Treasurer and Corporate Secretary. Now let's step back and look at the bigger picture. ENGlobal is in a tough spot. Filing for bankruptcy and taking on a high interest loan to stay afloat is not a sign of strength. It suggests they've been struggling to manage their debts and operations. The warning to investors about the speculative nature of their stock is a clear signal that things could get worse before they get better or go to zero. A key weakness is their dependence on short-term, expensive financing. A 12% interest rate is not sustainable. Their ability to reorganize successfully will depend on factors outside their control and on their ability to cut costs and find new revenue streams. The biggest risk is that they simply run out of cash and are forced to liquidate. In conclusion, this report paints a picture of a company in distress. While they're trying to reorganize, the path ahead is uncertain and full of risks. Investors should be very cautious. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more Corporate Decoder videos.